Okay, I think we're live. So good morning, everybody, and welcome to our Round the Clock Trader Summer School. It is indeed summer in this part of the world anyway, and a heat wave no less in the UK. So a majority of us are UK residents. So yes, I hope you're enjoying the fine weather there. I'm not in the UK, I'm in Spain, so we're rather more used to the heat waves over here, but great to see everybody getting out and about after the year that we've had, of course, especially rewarding. So I can see a lot of names already registered and coming in to the event, which is great. My name is Simon Campbell, and I am the publisher of Round the Clock Trader. And before I go any further, I'm going to check that you can hear me. So some of you have already been using the chat box there on the right-hand side. If I could just ask you to just do a yes, or we can hear you, or thumbs up, or something like that, just to let me know that I'm not talking to myself. That would be a good start, I think, for the morning. So I'll just wait a couple of minutes to check. Maybe my microphone isn't working, or something's the matter. So, oh, Dan, thank you, great. Super, well, you can hear me, that's great. So great to see you all here bright and early for our summer school that we've called it, because it is the middle of summer. So I appreciate you spending some time with us today. I know there's all sorts of other things you can be doing in the sunshine, but it'll be worth it, I assure you. We've got some great speakers lined up for today. Our first speaker, Martin Walker, is already here, as you can see in the chat box. We'll go across to Martin in just a couple of minutes' time, and we're going to get started. Before we do that, I'm going to tell you just a little bit about myself, in case this is the first event from Round the Clock Trader that you are attending, and if so, welcome. Thank you for coming. A lot of people here come to our regular events, and it's always good to see you all here and supporting these events, so thank you very much indeed. Just a quick bit about me, Simon Campbell. Yes, I founded IX Media, which is the company which publishes Round the Clock Trader, London Investment Week, another website we have, and the IX Investor Show, which is an in-person event for traders in London, and we're hoping that we're going to be able to open the doors at the end of November for that show this year, after not being able to run any shows last year at all. Born in Scotland, you may detect an accent there, although I haven't lived in Scotland now for many years, still regarded as home. Started off in banking, Royal Bank of Scotland, and then spent many years running private investor training companies, workshop companies, working for retail financial software companies, always connected. I've always spent my career working in the same sector, training investors and training traders, and Round the Clock Trader fits into that very well. What we do is build a community around trading education, and we offer regular events, and I try to bring to you as a trader as many interesting traders and products and strategies that I come across in the markets myself. And I try to make sure that we only feature the right sort of speakers, the right sort of educators. Because as you know, this industry is full of rogues, shall we say, some people that like to put the Lamborghinis on social media and that sort of stuff. So we try and steer away from that, feature real traders that really do spend their time trading in the markets, and share that with you. And hopefully that will come through in that. What I get out of it, a lot of people ask what I get out of these events is, well, I do build an email list, and I do work with partners. Some of them are featured on these events that we do, so I earn some commission if there is products and courses sold and so forth. And I also work with some brokers. They sponsor the events, and we supply education to brokers as well. So a little mix of ways that I earn a few shekels from all the work that goes into producing the events. So I hope you enjoyed today. As I say, I'm an associated member of the Chartered Institute for Securities Investment. Doesn't really figure on this role. It was a requirement for a previous role that I did with a company called VectorVest, who became FSA or FCA compliant. Therefore, I got all the professional investment qualifications. Good to have, but doesn't really impact your ability to make money in the markets. You don't need to have all this qualifications. As we'll show you today, the most important thing is just to have the ability to learn some new techniques and to build a discipline and a strategy and understand yourself. It's a very important part of trading. So enough about me. Let's see who we're going to be listening to today. We're going to start with my good friend Martin Walker from Forex Trading London. His presentation is going to be entitled "Learn High Probability Trading Techniques That Work." I think the last two words probably the most important there, because Martin's been in the markets for many years and has developed these systems and strategies that work for him, and he won't be telling you about them unless he was managing to make them work for him himself. So Martin will be with us in just a second. Then we've got Ian Coleman, who is a member of the Society for Technical Analysts, and he is going to tell us quickly how you can analyze any market using a chart in a short space of time. Many years in the industry. Ian, of course, most recently with a Signal, a live trading room and Signal Centre. He's a very good speaker. I think you'll enjoy listening to Ian at 11 o'clock. Tarun Nagapan, 3 steps to identify high profit target levels. Now, I haven't spoken with Taru for a couple of years. It was good to reconnect with him. He runs a business called Master the Markets, where they offer a very bespoke level of training for a small community, different ways of getting people in and over the hurdles that it takes to become a trader. A very personable approach, very personable guy. So I think you'll enjoy. He's going to give you a little snippet of one of the strategies that you use over there at Master the Markets. They obviously have a live trading room as well, where they use these strategies on a daily basis. Steve Ward needs little introduction. He's very well known in the trading world as the go-to instructor coach for trading psychology. He's hired by all the major banks and trading floors around the world in London, based in London. And I think previously, he used to coach athletes even. Very much, it's all about the mind with Steve, trying to get that mind in the right place to trade. And part of that is journaling, and that's what Steve's going to be offering our talk on today, is how you can keep a very simple journal, why it's important, what sort of information you should record in there, and what sort of benefits it can bring you as you go on, how you can use that to shape your trading performance. My good friend Adam Harris will join us again after Steve at 1 o'clock, how to create a professional trader mindset. I did speak to Adam yesterday and I said, you're following Steve, and he said, well, I'm doing more than just the trading psychology. Mindset will come into it, but I'm also going to look at trading routines for intraday traders, and what sort of tips I can provide for there as well. So he's going to look at some of the live markets, as well as just the trader mindset. So it's not going to be a repeat. I was worried it looked as if we had two very similar topics there. So Adam Harris at 1 p.m. Sunil Mangwani come from FibForex123.com. Risk management rules for traders. One of the most important topics of trading is how not to lose the capital or the profits that you may have made already. So he'll be joining us at 2 p.m. London time. And then finally, trading, it's as easy as ABC. Maybe we should put this one first with George Halming. He's going to tell us the ABC. A lot of you are familiar with the ABC pattern, technical analysis patterns. He'll be going into that and more, of course, in that final presentation today. So lots of good things to happen. It's not a full 12 hours. We're going to let you off at at 4 o'clock, so you've still got the rest of the day and a summer evening to enjoy. But let's go right back to the start to our first speaker, Martin Walker. We're going to share screens with him now, and then we can get into the presentation. So, Martin, I know you're there. I'm going to invite you first of all onto the screen. This is the first time that Martin will have used this particular platform. We changed from GoToWebinar a few months ago, so just some slightly different buttons to press.
Should be. There I am.
Okay, I can see, as if by magic, Martin is Good morning.
Good morning.
Great to see you. Thanks for joining early. You're starting our summer school, so I think you've already enjoyed some of the summer weather.
I have. It's been scorchio.
You're aging us. Even with that, we all remember the weather lady, the scorchio weather lady. Yeah. Thank you for the fashion.
Well, I was going to say, I played golf yesterday, and I'm regretting it now.
Oh, is it going to be even hotter today? I think
it's slightly cooler, but it's fine. You know, can't complain. We go on about looking forward to summer, and it's here. So, yeah.
That's it. Now you're down in the south coast, is that right?
Yes, I am in the southwest in Devon.
Oh, fantastic! Lovely part of the country.
Yeah.
So, Martin, the slightly new platform here. If you hover your mouse above your just above your webcam window.
Got it. Share screen.
Yeah, it's got a little arrow pointing off it. So, if you click that, by magic, we should start to go over to your screen.
Okay.
This is one of the things I noticed with GoToWebinar. One of the differences in GoToWebinar and this platform is that it was more or less instantaneous with GoToWebinar. This one takes just 4 or 5 seconds. There's a bit of a lag.
Yeah, I'm waiting for it to come up and just share. Still waiting. Okay, we'll get there, no doubt.
Yeah, it was good to see you. It's been a while, I think, since we did something. I know you joined me on an event last November. It was probably the last time we spoke, and
yeah.
Here we are, still in the middle of a pandemic, still want to get locked down.
Indeed, yeah. It's been a funny time, really, particularly for the markets as well. With lots of uncertainty, you know, no one knows which way economies are going to go and all that sort of stuff. So yeah, it's been
incredible, and I think people are very tired of it. But I mean, the situation here in Spain is no different. We've seen the influx of tourism just push the rates up for the last few weeks as well. So we're all wondering and waiting to hear news about what our fates will be. Kimberly's saying my screen has frozen. Maybe it's my connection. Yeah, I think we're all working okay, Kimberly. Maybe if it doesn't fix on its own in a minute or so, logging out and in is normally the best solution.
Okay, so you should be able to see my screen there, yeah?
Yes, we can.
Okay, so do I just click on that, or what do we do now?
I think I need to stop sharing my screen.
Okay.
Perhaps. And then, yeah.
Hopefully everyone can see my full screen there, yeah?
It's full screen. We're looking at the round-the-clock trade. We're looking at the browser and the sort of chat box repeated. So do you have another screen?
I've gone to full screen now, so you should be able to see everything. It may be a time delay with you. I don't know. Let me just come out of it again. Okay, so screen sharing.
Screen sharing.
Okay, let me just go and share this screen if I can. Yeah.
Yeah. So if you want to go into, have you got some slides or something that maybe?
Yeah, absolutely. I've got a PowerPoint presentation. It's open.
Right.
So
if you just put these slides on to if you click onto PowerPoint, we'll see.
I I
and
have.
then
Hold on. I hate it when things go like this. So,
that's fine.
so I've shared, and I've probably shared my whole laptop. So that's the trouble.
I think we just need to. What you need to do though is just to actually select PowerPoint. So now we're looking at everything that you look at on the computer. So if you just go to your PowerPoint as if you were normally updating.
That's it. I'm in. Yeah, I've done that. So
Okay.
you should be able to see. Maybe it's gonna hold on a second. I know what's going on. Sharing. Okay. So. So I go back up there. Here we go. So share, screen, and window. I want to have my PowerPoint, so it's not showing. That's the trouble. My PowerPoint isn't showing as a window. I don't. We'll get there eventually.
Yeah.
It's rather strange. So PowerPoint is available, so it should be showing it. That's the point.
It seemed to me that we just needed to click the tab at the top for PowerPoint and bring it up because we were looking at your browser.
Yeah. Okay. So toggle HD, share screen. Yeah. So I'll go into PowerPoint first, but then I lose the round the clock traders. That's the trouble. So I've got my PowerPoint there. Share screen. It's not giving me the option when I go. It's got entire screen window. If I go to window, I've got it. Bang. Here we go. It's finally come up.
Right, fantastic. There is a bit of a delay with this system.
There is. I think that's the cause of the problem. Yeah. Okay.
That's what I was just saying earlier on. One of these things I'll just have to.
Hopefully everyone can see me now. Yeah.
This is great. Yes, we are looking at the disclaimer, and it's looking great. So great.
Okay.
Well, listen, I'll step out and let you take over, Martin, and thank you again for joining.
Okay. Sorry about that. Okay. Good morning, everybody. Martin Walker from Forex Trading London. So today's session really is probably like a foundational session to sort of show you some of the key essential things that you probably need to have in your trading, which I use for all my trades. Okay. So let's get started. There's the disclaimer. I have to show that. The key thing is at the bottom, if you're a novice trader, trading a demo account until you've got a proven track record of profitability before going live in the markets and manage your risk. And we'll talk about some of that later. This is me, retired naval engineer officer, chartered engineer for many years. Started trading in 2006, moved to Forex in 2008, sought some mentorship. In fact, one of my mentors is Sunil Mangwani, who's talking later today. So listen to what he's got to say. Run a live trading session for Sunil. Was head trader of an overseas fund. Having proven my track record in a live account, they look for that. Okay, so if you want to do professional trading, you must get a profitable track record, which they can scrutinize. Now I trade, teach, coach, and mentor. Okay. I've got a background of the sea. I lived on a Thames sailing barge when I was a kid. Joined the Navy at 16, worked my way up through the system, and I like sailing and surfing. What's the link? The link is waves. The market moves in waves. So it's great if you can learn how to identify the waves and take advantage of them. So you're actually not swimming against them, you're swimming with the waves. We can't stop them, okay, but we can learn to surf them. Just bear that thought in mind when you look at the markets in the future. I'm primarily a swing trader. So yesterday I mentioned I was out playing golf. Can you actually go out and play golf and trade? Yes, you can. Okay. And it's highly recommended. So I've got a trading toolbox, which I've built up over the years. These are the things in it that I use all the time. Fundamentals, I try and keep tabs of fundamentals overview. I've got a trading plan, and I create bespoke trade plans for each trade I take. Okay, I use robust risk and money management. We'll go into some of that later. I use multi-time frame analysis. So when I'm looking at the markets, I do a top-down, and we'll talk about that. I use patience, discipline, and timing. I use key and supply and demand levels, and we'll explain all this as we go. Key fib levels, price action candlesticks, common patterns. I use a 1, 2, 3 strategy, which is a price action based strategy. I use divergence. Often I combine different things in strategies. I use wolf waves, or what's known sometimes as 3 drives, or you get rising and falling wedges. There's a few of them in the markets at the moment. Elliott Waves, talked about waves. So if you can map out what you think the market is doing in terms of Elliott waves, it can become predictive as opposed to reactive. I use harmonic price patterns when they set up. I take advantage of pivots, daily, weekly, monthly, and overextension. When something goes on a tear, like Bitcoin, for example, it shoots all the way up to infinity. Well, one thing's certain, it's coming back down again. Okay, and pivots can provide excellent targets when they've been missed. Right.
Martin, can you hear me?
Yeah.
Oh, good. Could I ask you the presentation? If you could maximize it into presentation mode.
How do I do that?
Just I would go down to the bottom right underneath the slide.
I'm in full presentation mode on my laptop. That's the thing.
Oh,
okay.
Right.
Oh, I know what's happened.
We're
yeah. It's this issue of trying to share your screen on PowerPoint. Hold on. Let me just come out of it. So you're seeing this?
Yeah.
Yeah.
Right.
Okay. Fine. So here we go. So I'm going to full PowerPoint again. From the beginning. This is interesting, isn't it? Stop sharing. Bring back GoToMeeting. So from the beginning. So now I'm in full PowerPoint mode, but I can't actually access see the sharing bit. So share screen. Hold on. Window. So there's my window. Share. And then you now can see my PowerPoint. Yeah.
We can. It's in the PowerPoint program.
Yeah. So when I go, I'm now gone into full screen mode.
Okay. If you can take the cursor and pull it down to the bottom right, there's a projection screen there. Just a little bit. You see, one of these old.
Down to the right, projection screen. Hold on.
No, it's gone. So there's a collection of about 2 or 3 little symbols. One of them is a.
Yeah. So someone go full screen, you mean?
Just to go into presentation mode. Yeah.
Right. I can't see it. I've got clip moments. I'm going through everything. I've got nothing. Hold on. Let me just go down. No, there's nothing like that available to me. Hold on.
Okay.
You are screen sharing. No, that's my chat. Gosh, I'm not sure where to go.
Okay. Well, I guess we'll just go back to do what we were doing before. Probably the best we can do, because at least you can see it. I just thought it'd be a simple look at the button.
I can't see the button. That's the trouble.
Yeah.
I'm gonna. Shall I just stop sharing for a minute?
Okay.
Okay. Right. Let me see if I can find. I've got share screen, toggle microphone. I know the one you mean. It's where you sort of get those sort of a little box with, and you can widen your screen out.
Well, it's more on the PowerPoint that we need to be doing it. It's the PowerPoint program itself, just at the bottom, just to put it into presentation mode. I believe.
Okay, let's try that. I think I found something. So I'll just share my screen again. Yeah. Window. Let's just go PowerPoint. Minimize. Window. Come on, PowerPoint.
That's always this is my fault for landing you in a new.
I can't see I'm going to my windows, and I can't see my PowerPoint showing. That's the thing now.
Well, let's just share the screen and try and get back to where we were, because it was fine. It was just me trying to get the best.
All right, it's coming up now. Okay, I think so. Here we go. Share. Right. Boom.
Okay, great. Okay.
Yeah. How's that?
Yeah, we're back to where we were, so I think that's fine.
Okay. Thank you.
Yeah.
Right. My fault. Not going to presentation mode. I've never done that before. Go to webinar doesn't require it. There we go.
But when you click, I'm just, if I could click the button for you, I would. If
Yeah, don't worry. We've done it. Okay. So if I overrun, I do apologize, everyone. Okay, here we go. So you've seen that one. You've seen the disclaimer. This is me. You don't really need to know about me. We know the market moves in waves. Can't stop them, but can learn to surf them. I've got a trading toolbox. And these are the things I've got in it. Okay. And the things in bold are the things that I use for every single trade. All right. So if you don't do those things, then these are things are the key essentials for any trading strategy.
We're still having a problem because I'm still looking at the title screen. We're not.
Hold on. Let me come out of this.
There we are. Okay, I'm looking at my toolbox now.
Okay, so that's my toolbox. Go to presentation mode, yeah?
Yeah.
So current slide, you should be able to see the full screen. No?
No. It's just
you know,
a slideshow, yeah.
Flip slide to current window. Boom. I've clicked that.
I think if we can work through from there, that's fine. It's just that we weren't changing the slides.
Okay.
Seems to be
well.
Just it must have just frozen for a second or two.
Okay. So can you see full slides or not?
I can see the my toolbox slide, and I can see your mouse moving.
All right. You're well behind me. So I am now, yes, I'm in the slide which is number 8.
Okay.
And you got that? You got that?
I'm still looking at my toolbox.
Yeah, my toolbox, that's slide 8 basically, and it's got all the things in bold.
Yeah.
And all the things. Okay, right.
Okay, so we're at the right place.
Right, okay, right.
Right.
I can't see what's on your screen at the moment because I'm in full PowerPoint presentation.
Absolutely fine. Yeah.
Okay, right.
Okay. Whatever you're looking at.
Okay. Have you got the full screen? That's the question.
We're not full screen though. No.
Okay, right. I don't know how I'm going to achieve that.
That's fine. I think we'll just go with what we've got.
Okay, right. If necessary, I'll do another recording in which you can share with everybody. In slow time. Okay, let's move on. So, strategy generic trading essentials. So, fundamentals overview, trading plan, trade plan, risk and money management, supply and demand, looking left, price action candlesticks, MTFA and multi-time frame analysis. And the key thing with that is context and conferences, and we'll go into that. Patience, discipline, and timing. And let's look at fundamentals overview. This is a funny one. Fundamentals to me means economics plus geopolitics. Economics, country's economic state, GDP, inflation, employment, central bank policy, I should say bank policy, not bank policy, central bank actions, news flow around the economic events. And then geopolitics is political policies, government policies, actions, events, war, famine, disasters, COVID, stuff like that, and the news flow related around that. We've seen, global warming at the moment and the floods in China and in Germany and extra heat in Canada and America, etc., and now over here in the UK. So all these things all add up to, they might impact on the markets and people might have a view on them. Should we be interested in fundamentals is the question, as traders, or can we just do technical analysis? Well, the value of a currency is described or quoted in terms of its value compared to another country's currency. i.e. there's two sides to the equation, the euro against the US dollar or pound against Japanese yen, for example. So we're quoting or comparing one country's economic strength or weakness with another one. This is why currency pairs move up and down. Supported by the flow of money around the world that has to be exchanged, plus speculation. And a large part of the financial markets is speculation, which is you and me. Why should we be interested in fundamentals? A currency pair is rather like a seesaw. We need to have an idea which way it may tip. And you don't want to be trading against the flow. So how do we go about fundamental analysis? We're looking for clues of divergence or increasing difference between two countries' economic pictures. We're looking for divergence in two countries' central bank policies and actions, known as central bank divergence. Okay, so two different banks, two central banks, could be the Bank of England, Federal Reserve, or the Eurozone, the European Central Bank against the Federal Reserve in America, and they've got different policies, and you'll get a trend in a currency pair. But at the moment, the trouble is, everyone's done quantitative easing, interest rates are very, very low all around the world, and there isn't much difference. Okay, so the movements in the markets are going to be based on other things. However, if we get back to normality at some point, then I would expect differences to start to occur. For example, if the US starts to reduce its quantitative easing and tightens that up, all right, as opposed to raising interest rates, because it's going to be quantitative easing programs which are going to be tightened first. If they do that first, then the US dollar may strengthen against other currency pairs without not doing that in their central banks, if that makes sense. And then eventually we may get to people raising interest rates faster than other countries. Okay, and then you may see definitive trends. But at the moment, we're not getting that. So the question is, speculators at the moment, we're thinking, well, who's going to recover first? Which country is going to recover first? And at the moment, I think people are probably talking about the States recovering first compared to, say, UK or Eurozone, etc. Now, do technicals need fundamentals or vice versa? It's a bit like the chicken and egg question. Which one came first? All right, the chicken or the egg? So when keep that thought in your mind, is the news already priced in? Well, both fundamentals and technicals drive human behavior, buy or sell. Okay, so buying and selling due to fundamentals will create market moves which create technical setups. So fundamentals, people are trading off that, which can create technical setups. But then they're then fulfilled by subsequent fundamental news driven by buying and selling, people's reactions to what they're hearing. Other times the news can be a shock to the market and everything gets reversed. But the point is, you'll have to decide, because I can't say which one comes first. However, there's an uncanny link between the two, because you'll have essentially, people moving the market due to fundamentals, which will set up a technical setup. And you take the technical setup, and then fundamental news will then trigger that setup and take it to its targets. Yeah. So you can't separate the two really. They're both intrinsically linked. Okay. You can trade the technicals with a bigger picture fundamentals or context in mind. So that's kind of where I'm at. Here's an example of perhaps one economy opening up after both being shut down and stagnating, as it were. So this is the US economy recovering versus the Japanese economy, going back to 2012 all the way through to, where was it? Let's have a look. 2015, pretty much. And the difference in the two economies and what speculators thought drove the US dollar Japanese yen on this massive trend, which happens to be an Elliott wave. And I'll mention that later. Okay, and we traded this. So you can do long-term swing trades with this, holding positions from here, maybe up to here, and that's a lot of pips.
Martin, sorry, yep. I'm going to have to interrupt again. I'm still seeing the My Toolbox slide.
Oh my God.
I know that you're a few slides ahead.
Yeah, I'm well ahead. Well ahead. So I'm now slide 17. So
okay, it's changed now. So there must be some sort of freeze that's happening.
Okay.
Now I'm looking at the generic factors.
Okay, so I know what's happening. Basically, okay, you can only see my PowerPoint when it's in the sort of slide index down the left-hand side.
Can you try to for me, if you look down the right-hand corner. You'll see
Yeah,
it.
I've done that. I've clicked on it several times.
You can see the percentage.
Yeah, I
Uh,
can see 84%.
And then just to the left of that, there's a little button. No, 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 not that one. Not that one.
No, yeah,
No, just to the left of the percentage sign.
yep.
So cancel that, and then the little icon that's immediately to the left of the. That's it. So if we try pressing that one, that should.
Can you see everything now? I've done that. I'm now in full screen mode.
It hasn't changed for me, but what about everybody at home? Are you seeing the same as I am? Because
this is not good.
we're on generic factors. Okay, well, all I can say is I'm sorry, the system's not working great. If we can struggle on with what we've got,
Okay.
I think I don't know what else to suggest.
So what can you see? If I do this, what can you see now?
Okay, now we're looking at About Me. Now we're back to the front screen.
Okay, let's just do this one and I'll stay in this mode. Yeah?
Yeah. Okay.
Right. Okay.
Everybody's saying they're with me. They can see the same as me.
Okay.
So, yeah. So stay in that mode, and then yeah. Okay. So we'll change.
We'll just do this one and we'll. Okay. So everyone's seen all this stuff before. Trading toolbox.
To my toolbox generic factors. Yeah. Okay. Great.
Okay. Right. So I'll very quickly skim over this again. So we got to fundamentals. And there's two sides to it: economics and geopolitics. Okay. For various reasons. Should we be interested in it? Yes, we should, is my view. You haven't got to be an absolute drilling down to everything. It's what I take as an overview of what's going on in the markets. Okay. Currency pairs like a seesaw. We need to know which way it may tip. We're looking for clues of divergence differences between two central banks in countries. That's known as central bank divergence. It's not really going on so much at the moment because everyone's quantitative easing and interest rates are really low. Which one comes first, technicals or fundamentals? Chicken and egg situation. Is the news priced in? Maybe, maybe not. Fundamentals and technicals drive human behavior. Buying and selling due to fundamentals can create technicals, which are then fulfilled. Those technicals are then fulfilled by a fundamental news. People buying and selling off that. Other times news can be a shock to the market, everything gets reversed. Up to you which one comes first. But one thing is, I know that they're all intrinsically linked, fundamentals and technicals. There is a possibility to trade the technicals with bigger fundamental picture or context in mind. And it's the context I want you to take away, the bigger picture. The strategic view of the market. So you get a difference in countries and there will be a longer term trend, and it may not look obvious on the lower time frames, but when you look back historically over the higher time frames, you'll see it. Okay. Hey, here is an example: Japanese yen, US dollar, Japanese yen, and a long trend upwards. Down here on the left-hand side of the chart was when the first green shoots of slight changes in economic news were coming out in America compared to Japan. All right, and it suddenly built from there. All the speculators got in here. Okay, so that's fundamentals. So fundamentals can drive technicals, and technicals can be filled by fundamentals. You can get changes in two countries' economic conditions, which can drive a trend, and that's what you want to be aware of. We're not there at the moment, but we may go back to that in the future. Okay, trading plan and trade plan. Planning, when I was in the military, it was banged into us: prior preparation prevents and planning prevents poor performance. All right, failing to plan is planning to fail. So, and I think people are going to do this later on today. What are your weekly and daily trading routines? Make a checklist. If you're going to fly an aircraft, you've got a checklist before you take off. The pilot goes through it religiously. Okay, make sure you've got a checklist, particularly when you're learning. After a while, it will become embedded in your subconscious. But what is your checklist? Write it down. Put it in your trading plan. Okay, what's the difference between a trading plan and a trade plan? The trading plan. Do you have a personal trading plan? What should it consist of? Okay, we'll do that first. the trading plan should be your why, what, when, how. Okay, so you would go and think about that. Your why. Why do you want to trade? What are you going to trade? When are you going to trade? How are you going to trade? The strategies you employ. What risk and money management rules are you going to use? What's your reward for doing well? It may be just going for a curry with your partner at the end of the month if you had a good month in your demo account. Yeah, but at some point, if you're doing, you're developing as a trader, then you want to start thinking about how you're going to get some salary out of it. Psychology. What's your psychological trading profile? What do you need to do to improve on that? Most people fall into two camps: fear and greed, that drive their behavior. I'm sure Steve Ward will talk about that. So it's good to know which one is which area you're in. I was in the greed. Now I was an impetuous trader when I was learning, and I had to take control of that basically to progress. Okay, tasks. So someone's going to talk about journaling today. So out of journaling, how am I doing? How do I feel? All that sort of stuff should come your areas to be worked on, areas for improvement, and you need to put those in your trading plan. They change all the time. As you achieve one step, you'll go on to the next one and the next one. But unless you identify them, write them down, you won't be working on them. So you'll just keep repeating the same mistakes over and over again. So you've got to write it down, you've got to work on it, and then you'll move forward. It's a personal thing. It's a living document. It means something to you and keeps you disciplined and focused. So keep it updated and do go back. So maybe when you get more experience, you might only look at it once every 3 months or so, and certainly do an annual review. But it's your business plan essentially as a trader. Hope that makes sense. A trade plan, though, is entirely different from a personal trading plan. A trade plan is a specific plan for a trade. All right, so maybe notes written down when you're analyzing the market, you've marked up your charts, your reasons for the trade, the context for the trade, your entry level, your stop size, your stop level, where your targets are, when to move to break even, are you going to trail a stop or not, etc. Okay, are there any news events which might blow your trade apart coming up in the next day, week, whatever month? To be aware of things like that. And if you do that, and so if you plan the trade, then trade the plan, you're then starting to focus on the process of trading. Okay, and if you can focus on the process, the profits should take care of themselves. It's a commonly used mantra, but it's very true. And I'll throw in at this point in time, the process is no different trading on a demo account, on a small live account, a medium-sized live account, or a large live account. It's the same. The process is the same. No difference whatsoever. The emotions may be different, but the process is the same. So how do we improve our process? So if you're process focused, we can plan. We can observe the market. If the trade triggers, we can execute the trade. We can manage the trade. And then after we've done that, and we've closed the trade out for whatever reason, we can analyze and adjust. So it's like a closed loop circle, reiterative process: plan, observe, execute, manage, analyze. So just if you can use that, and the acronym is a poem. So you start off with the P, poem. And the A comes after it. So poem A, poem A, poem A. Okay. Record keeping journal. I won't go over this too much, but essentially, when I take a trade, there's a comment, an MT4. There's a comment box, or in the order box, I write down what the trade is in shorthand, time frame, what the setup is, and if there's any other time frame conferences as well. The end of every month, generate an MT4 detailed report and study the stats. Okay, so it'll tell you all your different stats in there and give you an equity curve, tell you your profit ratio. That's the key thing. It's got to be above 1. If it's less than 1, you're losing money. Analyze bad trades as soon as possible for the reasons why they failed, and take corrective action and update your trading plan accordingly. Winning trades really doesn't tell you much. Losing trades tell you everything. All right, don't ignore them. They will help you improve if you analyze them. Keep a trading journal. What went well, what didn't go well, what parts of your trading process could be improved. Are there any related emotional feelings, and why? Take the what could be improved and put that in your personal trading plan under tasks. Okay, so that's trade plan, and I don't want to go too much in that because someone's going to talk about that today. Risk and money management. Sunil's going to talk about this later on today, but a quick overview. He used to tell me undercapitalization is a crime. basically, you need enough money in your account to be able to manage your risk and stay in the game. Now, most people start off with small accounts, so you may trade 2% per trade, risk 2% per trade. I risk 1% or less in my trading account. And I alter my position sizes depending on the size of my stop loss and the amount of trading capital I have. So my position sizes veer and haul depending on the stop loss and the trading capital I have. I only ever risk 1% on any trade. All right. So you've got a large stop loss because you're trading higher time frames and still only want to risk 1% of your trading capital, then you're going to need sufficient capital in your account to do that. Here's a worked example. I'm not going to go through it now because of time. I'm just going to leave it there for a moment and people can take a screenshot and go back and read over it. But it just explains how you can veer and haul and stay risk controlled. Okay, and why you need a certain amount of capital in order to do that. And here's another example there. So I hope you can take screenshots or stop the video in future and have a look at that. Okay, so to be able to trade effectively whilst managing your risk and also have the cushion to develop as a trader, you need to be sufficiently capitalized. And I mentioned the cushion because most people will open a small account and they will start trading live and they will then lose money. It's rather like a bathtub curve. You know, there's sort of the internal shape of a bathtub. You start to lose money. At some point, you'll get real and smell the coffee and say, "Oh, I've got to take control of this process," and then hopefully you'll come out the other side. If you don't do that, you'll blow up your account, and then you'll reseed it probably if you want to continue to become a trader, or you walk away and decide not to do it again. The point is, don't put all your money straight into a trading account when you're learning. Put a small amount in, minimum $1,000, maybe $2,000, and start with that. If you need to, then you can reseed it, but you don't want to be blowing up large amounts of money and losing complete control. So, and the other point is that the money you put into trading the financial markets is risk capital. That's on top of, your amount of money you need to live day to day, and then the amount of money you might have in your national savings investments, premium bonds, or whatever, in a low interest rate savings accounts, and then maybe on top of that, maybe a small share portfolio or property or something like that. Trading the financial markets is right at the top of your pyramid of the money that you should be putting in. All right. Do not put yourself or your life or the lives of your loved ones at risk by throwing all your money into trading the financial markets. Do it in a controlled, risk-controlled way. Okay. But don't be undercapitalized. If you haven't got the money, when you're learning to trade and you're in a demo account, just save a bit every month into a small pot. And then if you've got it sufficient there, split it in half, keep some back for savings or reseeding your account, and the other put into a small account, live account. Hope that makes sense. So we're being prudent is the word, I think. So risk and money management. This is what you're trying to do as a trader, is manage uncertainty, because no one knows what's going to happen next. We're trading the right-hand edge of the chart. And it's our job as a trader to manage uncertainty and protect our capital. By managing uncertainty, we are protecting our capital. So what do I mean by it and how do you do it? When you enter a trade, from that point onwards, you don't know for sure what the market's going to do next. So all you can do is try and manage that uncertainty by managing the controllables, right, which is doing the following. In fact, Tim Henman mentioned this about at Wimbledon this year, talking about all you can do is focus on the process and manage the controllables when you're a tennis player. It's the same for trading. So what can you do to manage, what are the controllables? Firstly, you can plan your trade and do what-if scenarios to make sure you're not a startled rabbit in the headlight if something changes. You can try and establish the context of your trade within the various time frames. So that's the higher time frame context. You can manage your risk, 1%, by altering your position sizes to match your stop loss and the amount of trading capital you have. You can place your stop loss beyond a technical level, which if hit by price means that your original trade hypothesis was wrong. Okay, don't trade without stops. All right, but make sure the stops are placed in a decent technical level, not just 30 pips or 10 pips beyond a certain level when you enter the trade. Okay. You can move to break even, or you can set predetermined take profit orders by using limit orders and MT4. and most other trading platforms, you can move to break even at a time of your choice, taking your initial risk off the table. You can trail your stop loss at a suitable moment to an appropriate level to lock in profits, and you can close your trade at any time. Okay. Apart from that, there's not a lot else you can do, right? You might consult a mystic mega or a fortune teller, but if you do all the things that I've just been through above, you'll at least stand a reasonable chance of having a successful trade. And the point is they're less of an emotional roller coaster because you're managing the controllables, you're managing everything that is controllable, and therefore you should be, and keeping your risk to a minimum, you should be able to sleep well at night. If you can't sleep well at night, your trade size is probably too big, or you haven't got stops in place. You've broken your rules. So the more effort you put into the planning stage, doing what ifs and looking for market conferences or sweet spots, the higher the probability of having a successful trade as well. Plus, you can exercise patience and discipline by waiting for the best trades to come to you rather than trying to force the market when it's not ready to give you profits. Most newbie traders will say, oh, I've got Monday and Tuesday off work, right, I'm going to trade today. They open up their charts and they try and force a trade. The market might not be in a fit state to give you a trade that day, but that's the only 2 days they've got to trade. So they will take slight risks and then they'll lose money and they'll get disheartened and they'll try to revenge trade and get their money back, and it gets worse and worse, so you just dig a hole for yourself. Wait for decent trades to come to you. Always try to assess the best course of action and don't be too greedy, as the market has a nasty habit of taking it back and your previous winning trade can easily become a losing one. So if you get a decent profit and it's hit a certain level that you've pre-planned, take some money off the table. If you place profit-taking limit orders when you enter the trade, then decisions has been made for you and you won't be umming and ahhing at the critical moment. Shall I hold on a little bit longer? Is it going to go further? Just take the money out. Take a chunk of money out, put it in the bank. Happy days, all right? Most of the time, the market will probably come, it's done an impulsive wave, it's done really well, got to the target, and it'll then correct and start eating into your profits. So make sure you're taking some money out of the market. And you can adjust limit orders if you desire, if new information becomes available. All right, you might see something else in the market and say, oh, okay, right, now I'm prepared to extend that target, or I'm going to trail a stop, or I'm going to take half of that original target off and let the other half run. All those sorts of things you can do as you become better at it. Practice and experience will tell you when the best time to move to break even is, but when learning, if you've hit your first target, then take the profit. You can move to break even after your entry has been tested by price, or price has clearly moved beyond the most recent high or low. You can trail your stop loss if well into profit. I like to wait for a decent pullback, 3-wave correction, and place my stop loss up behind that. So price has moved up, it's corrected a little bit, and then moved away again and break the recent high. I'll then move my stop loss under there. It's a safe place. Sometimes when you realize that you've got it wrong, it can be prudent just to close out your trade for a smaller loss. It doesn't, if a trade doesn't feel right, your guts aren't right, well, fine, close out, doesn't matter. If you have a massive losing trade and something's going against you, the minute you close it out and take that loss, you can start focusing on the markets again. Until that happens, you are completely obsessed by this losing trade. It's destructive. So take the small loss, don't move your stop loss, and then reassess. It may mean you might get into that same trade again, just because the market makers might have been looking for some liquidity and they've just tested the lows or highs or whatever, and then it goes in the direction. That's fine. Okay, I'd rather take a small loss and then make a larger profit than take a big loss. Similarly, if you can see that momentum has failed despite reaching one or several of your targets, then you reassess your best course of action. So, don't hold on for dear life just because your trade plan says that. You've got to be agile and adaptive in the markets. Okay. The more robust your risk and money management is, the longer you're going to last in the trading game. Don't get wedded to a particular trade or market move or market direction because it moves in waves. If in doubt, stay out. If you're not convinced by analysis, stay out. So have a think about how you're going to manage uncertainty. What are the controllables? And if you can manage the controllables, it'll help your trading enormously. Okay, let's look quickly at price action, supply and demand, looking left, etc. Before crossing the road, what do? Everyone looks left, right. left again, or looks right, left, and right again, depending on which side of the road people drive in your country. Why? Why'd you do that? In order you don't get run over and stay safe. So it's no different for trading. Always look left and try and stay safe. Why do I say that? It's because the market moves because of order flow, and when you get large orders in the market, price moves away from certain levels, and that's known as supply or demand. So sell orders or buy orders. Lots of sell orders in value, price goes down. Lots of buy orders in value, price goes up. Areas where there's more sell orders is known as a supply level or zone. Where there's more buy orders, it's known as a demand level or zone. Supply is equal to resistance, demand is equal to support. Okay, these zones or levels are where traders place orders. And what does this look like on a chart? Here we go. So here's an example. These two wicks here, big red candle, sellers, supply. Okay, there's probably a few orders been left behind, or people, experienced traders, are now placing orders up here to sell. Price then comes down, pulls back, falls again. Another little sell zone, supply zone. Comes down, finds support, bounces around here for a while, comes up to retest this, sells off again. This time, this level here has been tested once, twice. Third test, it breaks through and comes down to the next level. See how price has moved up strongly from here? Into demand zone. Price tests the demand zone, comes back up, and goes back into that previous support zone. Now, when price breaks through a zone or level, it flip-flops. This level flip-flops from it was support, it now turns into resistance when price comes up to test it. See that? Straight through, now it's resistance. And then price falls lower. Retest this level here. Market doesn't like that. It goes divergent across here, and then price starts to move up, breaks through this previous level here, comes back to support, moves up to test that one again. Again, this is rejected. Second test, comes back down, finds support. See this wick here with the candle bodies closing here? Project that across, price comes back, tests a bit deeper, comes back out again, and then breaks through again. Back to the demand zone here. So this is kind of like a step ladder or steps in the market where price moves up and down in between. And if you can identify these little zones, depending on what time frame you're trading on, then you stand a better choice of understanding where price might reverse. So if we've got these levels identified, we can trade off these levels or zones, trade between the levels or zones, trade to them, trade away from them. Plus, if we've got a good zone, then our stop loss can go, say if we're going short here, our stop loss can go above here because the zone is identified. If it breaks that zone, we don't want to be in the trade anymore because it's going up. Yeah. So here, price comes back down. You're not interested in buying here. Our stops go be under here at the bottom, right here. Okay. So if we're going to trade off a good supply and demand levels or zones by looking left, then we need to get some confirmation of a turn in price action. Prices close outside, so price closes outside the zone, the direction of the intended trade. Could be some confirmation. Price action confirms the reversal. Price paints a nice rejection candlestick. Yeah, let's look at price actions and common candlestick patterns. So we're looking for the term. The key thing to take from this is we're looking for price rejection at one of these zones or levels. So let's look at another example of price action. We'll come back to the candlesticks in a minute, but price rejection. So think price rejection. So there's the original demand zone. Price moves up, pulls back. So high, high, low. Price moves up, comes down to tests this area. Look at this long wick being built here. Yeah. Go long above the highs here. High, 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 low, high, 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 low. That's an uptrend dictated by price action. Okay, going from relatively cheap to relatively expensive, off a demand zone here. Same coming down, test the zone, price comes down, makes a low, makes a lower high than the previous high, lower low, lower high, lower low, and you can see that's a trend taking place down there. So price comes up to the high, come down, pulls back, gets rejected, gets some confirmation, we're closing below this little low here, maybe go short, stops above the supply zone, and then away we go. Yeah, target down here. So if you're looking to trade long, then you're looking for the low at the demand zone to be followed by a higher and then a lower high. So that's the little 1, 2, 3. I mentioned 1, 2, 3s before, so 1, 2, 3, and some confirmation of that. Similarly, going short, high, low, lower, high, 1, 2, 3. And there's some various tools we can use, fibs and things like to test this, to test the 1, 2, 3 out, put it through some filters to see if it's a good one. But essentially, price action should tell you. Okay, so that's price action in terms of movements, highs and lows.
Martin, we're just going to have to just give you a kind of a couple of minutes.
Yep. Okay.
Warning. Sorry, we've lost so much time at the start.
That's fine. Don't worry. Okay, so candlesticks, go and learn rejection candlesticks, doges, hammers, yeah, shooting stars, pin bars are great, highly recommended. Bullish engulfing, bearish engulfing. Railway tracks and tweezers, all these show reversals. There's loads more. Go and look up on go and Google it. Stacks of stuff out there. Combine price action and candlestick patterns and supply and demand zones. That's the key takeaway. Yeah. Ask yourself, what's price done? What's price doing now? What could price do next? And do I want to get involved? Yeah. MTFA, multi-time frame analysis. Top down, bottom up, look at monthly, weekly, daily, 4 hour, 1 hour, and even down to the lower time frames if necessary. Mark up what you see, look for conferences, key supply and demand levels, key fib levels, trend lines, whatever. How many reasons have you got to take the trade? If in doubt, stay out. Lastly, patience and discipline. Be a sniper, not a machine gunner. Plan, observe, execute, manage, analyze. Look for your 1, 2, 3s. Patience, discipline to trade the plan. Wait for the setup, get your timing right, look for some confirmation, pull the trigger, boom, trade the plan. That's what we've gone through today. I'm sorry it's been a bit of a ragged presentation. Okay, so
I'll take responsibility for that, Mark.
Okay, so just to tell people, show people, using these techniques, what you can achieve. This is my recent oil short, going short from here, using a wolf wave or 3 drives. T1, T2, pull back, add to the trade, back down here, another profit taken, another one taken off here, and then we've closed out. Okay, and that's it fulfilling itself. I've got had one position left here. Those have all gone. We're trading down to some various levels. Want to know more about the essentials? Go to that link, top 10. Anyone's interested in coaching men?
The link is in the box as well. From
okay, great.
Yeah, so
there's that link there. There is. Okay, today for RCT guys, you get 10% off. What happens is you put your details on my website. You'll be sent an example draft program of personal mentorship. I will send you 20 scoping questions automatically. If you fill those in and can be bothered to fill them in, I'll reply to you. All right, and we can take it further. We'll then have a chat to see if you're serious about taking it forward. For personal one-to-one mentorship, I need people to be serious. However, today you get 10% off all my prices through RCT, the RTCT community. Okay, those are the links again for anyone who wants it. And
anybody can contact myself, and I'll put you in touch with Martin. I'm very happy to do that. Okay, Wilson, thank you so much. And I'm so sorry it's been a bit of a bumpy start. It's this new platform. It's got a few gremlins, but I'm glad we got there. And thank you. We did get the gist of what you're talking about, the multi-time frame analysis and combining the different signals. But I know there's a lot more on your website. I've been on your website before, so that's the place to go. So fantastic. Thank you very much indeed, Martin Walker at Forex Trading London. I will. What I'll do is I'll take the screen share back from you now. If you can stop screen share, I think.
Okay, let me try and do that. So.
And we'll move on.
There we go. Okay.
Thank you. Okay. No, you did well. Thank you. Many more would have just given up and walked away. So, thank you so much.
If you want to if you want a perfect recording of that, I'm happy to do it and send it to you, son.
We might do that. We might do that. We'll get
it. Okay. I'll speak to you later. Take care. Have a good day. Bye-bye.
So thanks to Martin Walker. Okay, so we're going. We're on a schedule. The reason we can't run over is because we are streaming this to YouTube at the same time. So we want to try and stay